Good morning. How's everybody doing? Afternoon, exactly, Brenda. You can hear me, right? I got my mic unmuted this time. Last time I was fighting that, I started talking. It wasn't, the mute button was on, so it did not work. Make sure I have my hair done today before I turn the camera on. Sometimes I just get up and just go and forget. So awesome. Thanks, Andrew. Good morning, Kevin. How's everybody doing? Uh, well, there's the cat tree that I still have not made, even though the new one likes to use it. She climbs it, but she can't jump up to the top yet. So good morning, Helen. Who knows if they'll make an appearance? I don't know. Hopefully they don't start fighting. So far we haven't had that yet, right? Even though they have, they start. I don't know if they're play fighting or actually fighting. I hear the Maine Coon growling all the time, but and I'm having one more cup of coffee. So, but let's get to it. We're gonna have a little bit of fun today, I think. A little bit of a touchy subject, or it can be, depending on your persuasion, but we'll we'll do what we can. So I'm not a registered broker or investment advisor, though. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. So here's what's coming up, though. Inner Circle, March 31st and April 7th. The quarterly is April 25th and 26th. And then Mastermind Group, April 1st and 8th. Trade U, April 7th and April 16th. Mastering the Trade is April 14th. Power Hour is every Monday. Trading Coaches Playbook. This one is every Friday at noon. The joke's on you. I guess that's a good theme for April, huh? The joke was on my mom on March 31st, 49 years ago. She was with the doctor on the 31st, and he said, "You got at least 2 weeks." And that night, her water broke. So I'll admit it. I'm an April Fool, baby. For some of you, that explains everything, right? Okay, all right, I get it now. So yeah, that's yeah, feet first, April 1st, and I was supposed to be a girl, but had an outie instead of an innie, and I was nameless for a few days. So it was quite the start to this journey. Anyway, Power Hour plays every Monday and Thursday. Cover Call Explorer with Trip on Thursday, and then E-Mini Think Tank with Brandon on Monday, Wednesday, and Thursday. So check those all out. I was waiting for somebody to say something. I'm like, there's no way that everybody's in this room is going to stay quiet. Some of you know me well, and it's like, okay, now I get it. Which maybe I needed to explain that so I could have a little grace, right? But yeah, yep. I was doomed from the start. But anyway, uh, I have fun with it though. I mess with people. It's like, oh, it's your birthday? They're like, ah, April Fools. Maybe I'm messing with you. I don't know. Anyway, you can find us on all the social media platforms. You see, if you're not familiar with my stuff, Patterns in Flash is something that I created. Gosh, it's been 15 years ago. I think that's well, yeah, it's been about 15 years ago since we first launched it. I started creating it in 2007 or 2008, and then officially launched it in 2010. And so, but it's the one thing I fell in love with when I started trading is technical analysis and specifically patterns because they're um, consistent, repetitive. So once you learn to recognize the patterns, which is the problem I ran into, is that I wasn't seeing the patterns. I read books, started learning about the patterns, understanding the power that they had, the predictability they gave us, and how they put the odds on our side. But I'd see them, I'd go hunting for them in the charts, but I start to see them, I get all excited, then I'm like, well, that was 6 months ago. What good does that do me now? Because the pattern's already played out, and it played out beautifully, right? So you can't do anything once it's already moved past it. So that frustration led me to creating basically a flashcard system for myself to train my eyes to see the patterns. So I would sit and just hit the space bar and flip through these things, training myself to see the patterns and recognize them. And then it was surprising actually because I didn't know if it would work. I figured it would. My mom was a teacher. I grew up using flashcards. I mean, who doesn't, right? You use flashcards for math to learn math. So why would they work to train your eyes that repetition just over and over and over again to learn to recognize the patterns? Did the same thing, and when it came to blackjack, right? Learning to that's one thing my dad taught me when I was 16. I showed a little interest in blackjack. He gave me a book, The World's Greatest Blackjack Book, said read that to page 200 and forget the rest. Once you're done with that, let me know. And so I finished it and then came back to him and he got out a deck of cards and he said, here's what you do. Learn to count, right? It's the basic counting system. It's really, counting cards is actually really, really simple. If you know how, you know what I mean. If you don't know, it's super easy. Super, super easy. I was 16 and could do it easily. We were going around to Reno, and that's why I was motivated because I wanted to learn how to do this. He goes, here, just flip over the deck, do this, and do your count, and you should be at 0 when you get to the end of the deck. He goes, if you can do that in 30 seconds, you can keep up with any dealer on the planet. And it was just a few months later, I was 17. We went down to Reno, and I went to the casino, left my ID back behind. And maybe I shouldn't admit this, but breaking the law. But I went and started playing blackjack, and nobody questioned me. They didn't care. They wanted to make money, right? Back then, I mean, that was, what was that, 1991, 92, something like that. They didn't card me. They didn't ask me anything. I just sat there and played. And after I got over the nerves of being, worrying about getting caught, I started counting cards just fine. And my dad was right. That training, just sitting there doing it repetition over and over and over again, allowed me to be able to keep up with everybody, even when I was nervous and worried about getting kicked out. So that's really that's the original concept of Patterns of Flash, was to create a repetitive tool to train our eyes to see the patterns. And it worked. So if you haven't experienced it and you want to recognize and see the patterns better and learn, you want to upgrade your technical analysis, it might be a tool you want to look at. So Weekly Whispers is basically my research I do every week. And then I just record it on a video, just like we're doing now, and just pre-record it so that you can get it. You'll get it the day after I do. I do it Thursday nights, and then I record it either Thursday or Friday morning. So you get it usually either sometime on Friday, sometimes on Saturday. Just depends on when the tech team gets it out. So, but typically you have the weekend to go over it. And I've got anywhere from 20 to 30 candidates every week that I'm looking at. So I'm looking at the pattern. I go hunting for patterns. I look for, I go through about 300 or 400 stocks every week. I'm just looking for a pattern. Essentially, I just rip through it, find the patterns I recognize, narrow it down to typically about 20 or 30 patterns. I think I have 32 or 33 this week. And so sometimes there's a lot, sometimes there's not many. It just depends on the market conditions. And then I just sit there and record what I'm thinking and what I'm seeing and my macro view, what the big picture is. And here's the candidates I have for the week. So the Small Accounts, Big Returns is a pre-recorded class I did a couple years ago, I think. All about, if you're starting with a smaller amount, how to work through that and hopefully turn it into a big account. So I'm not sure what you mean by that, Dennis. You see today's downturn yesterday in the patterns memorized? So, before we get into this, because I don't know if this topic will be great. Let me actually address that real quick. Maybe. Spider. So is there any pattern that indicated today was coming the way it is, the dropping? I think that sounds like what you're asking is, was there any indication from yesterday that today's drop was going to happen? Okay, that makes sense. I just like to make sure I'm clear on what you're asking. So, yes and no. And that's the tricky part. I mean, and I'm going to go here for a minute. I'm just going to bear with me, Dennis, because I don't want this to sound bad or harsh, but it's easy to get caught up in this idea that we can know what's going to happen next. There is no certainty with what's going to happen. Patterns don't give us 100% accuracy. I mean, they can be 100% accurate, but there is no black or white answer to the vast majority of stuff, especially when you talk about analysis. Part of hence the reason it's analysis, right? It allows us to form an opinion of what we think might happen next. But there's no certainty to know what's going to happen next. And this is where my mind starts to go, because I get deep into the psychology side of things, because that's one thing that I love. And that's what I see in the charts, right? Is that the patterns that we see are a visual representation of how traders are feeling, right? But just because traders are feeling a certain way and it tells us that this is how traders are feeling, doesn't necessarily mean that's how they're going to feel the next day, right? I mean, if you are married or you've been married, you know exactly what I mean, right? One day your wife's happy and everything's wonderful, and you wake up, somebody woke up on the wrong side of the bed, and it's like, it's a whole different story, right? So, it's easy to get caught in that trap of looking for something that's definitively going to tell you what's going to happen next. And I fell into that trap as well. If you don't know me yet, I teach from pure experience. Uh, I've fallen into lots of traps, and that's part of the reason I love doing this. Is hopefully I may not stop you from falling into the trap, but at least you can be aware of it, so you know it's there, so that hopefully you can avoid it. But if you don't, at least maybe the pain will be less, if you know what I mean. Um, okay, now we're getting there. So well, we use analysis to decide. I mean, we have to see, now this is where it gets tricky because not really, I'm not trying to parse words or anything, but we analyze the chart, we look for patterns, we look for something that tells us this is what we expect to have happen based on what it's the information we have now, right? So we're using the patterns, we're using the analysis to decide, and then you do pick a direction. And you have to say, I think this is what's going to happen next. But and maybe I'm wrong, maybe I'm misreading your question, but it sounds like a question from somebody that's looking for a definitive answer. Like, I know this is going to happen tomorrow based on this information. So I don't know, maybe I was wrong on that, and that's possible. And I see that all the time. And like I said, I fell into that trap too, because we all want something that's, yeah, guaranteed, right? If you get up and you go to work, you're going to get paid, right? Well, in business, there's no guarantee. And this is a business like any other. You might get up and go to work and lose money on the job, right? You might screw something up. You might, dig in and break a pipeline, and now the city bills you $20,000 when you only charge $10,000 for the job. So I don't know if I'm explaining this well or not, but um, so yeah, well, we use analysis to make the decision. You pick a direction, but we have to keep in mind all the time in our heads that we don't know there's no definitive way to know what's going to happen next. So, and that's the reason that's such a dangerous trap is because if you get stuck on an opinion and you're not flexible and willing to change that opinion, you're going to have a really hard time trading because the market changes all the time, right? It changes, but it doesn't, if that makes sense. It stays the same. The psychology part of trading is the same. Conditions change on a daily basis, and we have to be mentally, psychologically flexible and be able to adapt to, okay, it looked like it was going to do this. I thought it was going to do this, but I was wrong. And it's now doing this. Does that make sense, Dennis? I don't know if I'm explaining it well or not, but I do see something here that gives us a clue that this could have been coming. Not only is there lots of momentum, when you look at this drop that we had, and you look at the volume, and this is something I talked about 2 or 3 weeks ago. If you go back and look historically at the volume, you can see the blue line is the moving average, right? It's a 21-day moving average, which is essentially a month, right? There's about 21 trading days every month. Why are we having that? It seems like every week somebody has a problem not seeing anything. Somebody's saying, I don't know if Andrew can look into that. Joe's saying he's not seeing anything. I'm showing on my end that we're looking at the chart. So, okay, good, Dennis. Let me try to stay where I was going. As you know, I'm a fool ADD. Okay, good. You guys all see it. Good. Thanks, Tom. Thanks, Brenda and Dennis. So yeah, I'm not sure what's going on, Joe. Maybe log out, log back in. Um, but yeah, it seems like that's happened a lot more lately where somebody says the charts aren't showing for them, the screen's not showing for them. So, but you can see the volume and how that blue line on the bottom has just been drifting lower I mean, that's April of 23 when it really kind of spiked for quite some time. And we were literally on the spiders doing 27 million, where just dang cat. I mean, what was that? April of 24? A year ago, we were doing 72 million. So we're like 30% of the 30% of what it was doing a year ago. I mean, volume wise, the volume's dropped 60 or 70%, even though we've had this big bullish run. So as you probably all know, if you've done, if you understand volume analysis, is when the stock is going higher, or the market in this case is going higher, but the volume is getting lighter, that means there's less and less bulls showing up to the party. So even though we had this big bullish run for a year, year and a half, 2 years, there's not as many people showing up to the party. And what commonly happens, and you can see here, I mean, even in this spot back in June of 23, we had an 11% drop over 65 days. I mean, the volume dropped off. It was pretty steady here, but it spiked a little bit. That's not really a great example, but you know what I mean? You can see the spike we've had in volume. So getting back in here. Um, so you see the volume spike where we went from, early February, we're doing 26 million shares a day. And 4 weeks later, we're doing 41. A good 50, 60, 70% jump, whatever that number is. It's a lot. So that momentum right there tells us that the Bears are in control right now. And then we look at the last couple of weeks and you look at the volume and how it's just dried up even more. The Bulls are not coming back with a vengeance, right? You look at some of these other dips, you get this little 2 or 3 week dip here, not a whole lot of volume, but when the Bulls come back in, they came in with some pretty solid volume. A little dip here, right? Not a whole lot of volume on the sell off. So the Bears didn't have a lot of momentum. The Bulls came back in pretty solid. You got 3 days there. It was pretty solid that created enough momentum to rally it up here. So first things first, we're looking at this chart to go back to answer your questions as best as we can without the psychological side. Is we've got lots of momentum on the bear side with a huge increase in volume. In the last couple of weeks, we've had a pop back up, but the volume is getting lighter and lighter. And then what we have is an evening star pattern right here. So even though it's a reversal, right? And reversal is a misnomer. For those of you that have been through patterns of flash, you know that. It doesn't mean, because a reversal doesn't mean it's going to turn and go the opposite direction. Stocks go three ways, right? Up, down, and sideways. So if we've got an upward move, which we did here just for a couple weeks, it's not a big move, but it's moving higher, which where the pattern shows up is important. All it says is, okay, we were moving up for the last couple weeks. We could just go sideways. But then we get a little doji yesterday, which was a clue that, okay, we really don't know which way it's going, but it's at this support level, at 565 area. So we have a bearish reversal pattern, a stall day yesterday. And with this momentum coming in, the odds are that we're going down from here, not up. And again, I look at things from an odds perspective because, again, we never have 100% certainty. So I look at things, okay, based on my analysis, what am I looking at? This momentum, a little rally up, a nice little relief rally, which is no surprise. That happens because things don't usually just fall off a cliff. They typically rebound like this for a little bit. But then we get an evening star pattern, basically an evening doji star, which is even stronger. And then a doji day and 565. So my thought process would be if it breaks below 565, it's probably going to continue the downward move. And it just so happens that it's doing it today. That's not any genius thing on mine. It's not any spectacular. I mean, the analysis is solid, but the fact that it's going down today doesn't mean anything. It could have just as easily gapped up this morning and bounced higher. We had PCE, we had some news come out this morning, which is what has created this momentum. And I have a feeling that the news is going to get worse as we go. So let me catch up here. I got quite a few comments coming in. So we haven't even gotten to the touchy stuff yet. We just do an analysis here. Inverted flag, Brian. Kind of, yeah. I don't know that I've ever seen anything. I've never seen anything in a textbook or any trading book that talks about an inverted flag. But conceptually, it's the same thing, right? If you have a flag where you have a big move to the upside and then a stall out for a little, for those of you, if you're not familiar with the flag, those will be close at least. But if you're not familiar with the flag, then you definitely need patterns of flash, plain and simple. But yeah, I mean, I don't see any reason you can't take the same concept and apply it to a bearish move. So, I mean, the concept itself is there. I've just never seen it anywhere. So I use it. So, I mean, if I see a move like this and it looks like a flag, I trade it off that too. So, okay. Well, yeah, Dennis, seeing the charts, analyzing the charts is one thing. The psychology behind actually trading well over time, consistently, that's where the tricky part is, right? Learning to analyze the charts, learning strategies, all that stuff is fairly static. Uh, but yeah, it's the mindset, the mental part of trading is the most difficult. It's like that in anything, right? I mean, if you're going to be a pro athlete, that's what differentiates the ones that go pro and the ones that don't. I mean, sure, the physical talent, you got to have some talent there and you got to learn the game. But if you don't have the right mindset, I went to school with a guy that went pro. Took him 13 years to get there, and he was less athletic than two other guys that should have gone pro, but they didn't have the mindset, and he did. He wanted it, and he had the mindset, and he worked his tail off to get there. Even though he was less physically athletic than one of the guys, one of my best friends. I grew up with him. He's the most athletic guy I've ever seen. Video games, pick up any sport and just crush you. He would play half speed with me against basketball, and that was decent. He'd play half speed and still kill me. And if I started getting ahead of him, if I was having a good game, I'd get ahead of him. He'd just turn it on and just crush me. It's just not fair. He's just quick, everything about it, just super talented. But he didn't have the mindset. He knows it now that he's in his 50s, but um, that's a good way to put it, Dennis. I like that. I'm going to steal that if you don't mind. So Dennis said this. He said, so often I feel like the charts are simply an image of what is in the rearview mirror. And it's like I'm driving down the road without a front window I can see out of. That's awesome. I love that. Because I mean, that's essentially what it is. Yeah. You're looking in the rearview mirror and you're trying to decide where the path forward is based on what's behind you. I love that. It's awesome. But yeah, I mean, it took me probably a good 15 years before I realized that what you see on your screen right here is just a visual representation of how traders are feeling about either that particular stock or the market. In this case, it's a spider, so it's the overall market. And that's why candlesticks are so powerful because they give us so much information as far as how people are actually feeling, right? The bulls, and it's always like I think of it as a tug of war between the bulls and the bears, like who's winning. And if we just go to this, take this one pattern, for example, I mean, you see the big gap up here, right? So the bulls are clearly winning. They're winning out of the gates and they run it higher all day long on this one particular candle. Excuse me. So the bulls are fully in charge here. The next day you get a doji, which is indecision, right? The bulls and bears have a tug of war, and the bulls had the bears right on the edge of pulling them all into the pit on this day. And the bears came fighting back the next day, and they ended up equal distance from the pit. The front guy and the front guy on both sides are both 6 feet away, right? Where before, the bear was on the edge of the pit, about ready to get pulled in. And then what happens the next day? The next day, boom, the bears come in with a vengeance and just yank it back. And now the bears or the bulls are on the edge of the pit. The bears are kicking their butts. And then the next day, it's a tie again. Well, and today the bears are obviously winning, and it looks like they've probably pulled they've probably pulled the bulls into the pit at this point. Because this is, even though this is not exactly real time, this is about a 15 minutes delayed. This is streaming, but it's 15 minutes delayed. So this is updated at 9:09, which is 15 minutes ago. And you can see we're already what are we, 3 hours into the day? We're not even halfway into the trading day, and the volume is already almost to where we had the last couple of days. So by the end of the day, it looks like, unless something changes, by the end of the day, this is going to be another big sell-off day with lots of volume. Probably more volume days like this. So, and again, I mean, inverted flag, I like that because that's essentially what this is. It breaks below this level, and the odds are we're headed lower. So, falling three. If you're including today, yeah, it's not textbook, but unless you're talking about, well, I guess yeah. Well, that's the thing about patterns is there's open to interpretation to a certain degree. Some are really clear. That evening doji star is beautifully clear. The volume's not exactly textbook, but it doesn't necessarily have to be on the bearish side. But this is not a bearish engulfing pattern though, because it's not where the pattern shows up. It's in the part of a move, even though it engulfs the previous day. This is the bearish engulfing pattern right here, right? Where we're moving higher and then it engulfs the previous day. So anyway, um, oh, you were in a bearish trade, I'm assuming, then, Dennis. Yeah. Here's a suggestion. If you're in a trade and you're having a hard time figuring out what may or may not happen, and you've got more risk on the table than you want to have, and you don't want to take the chance that it goes against you, why not just exit part of the trade? I mean, for example, if you let's just say you had 10 contracts. Again, I'm just throwing it out there. If you had 10 contracts and yesterday you were like, I'm not sure what to do. I don't want to leave all the risk on the table. Maybe you just take five off. Maybe you close out five of them and say, you know what, let's see what happens tomorrow. I'll leave some risk on the table just in case it does what I thought it was going to do. I was bearish, but now I'm not sure. It goes back to the question that it took me a long time to figure this out too, is that the question you should always be asking, and this is actually going back to your previous comment, Dennis, about um, the psychology before being in the trade, then you're in the trade that's different. Even though realistically, I don't think it should be. The question that you should be constantly asking before the trade, during the trade, should be, am I comfortable with the amount of risk I'm taking? Because when we're new to trading, a lot of us come in and we get excited. You look at how much you can make, and that's what your main focus is, right? You're like, okay, if I get in this trade, it does. I know it's going to do this because the chart says this. There's an evening doji star that has to go down because the pattern says it's going to go down. Well, there's has to, gonna, any definitive words that you use, you tell yourself in your mind, you need to kill them. Just axe them right away. As soon as you find yourself talking and just having that mental conversation that this is what's going to happen, you get definitive, that's when you're in danger. Because that's when you can't shift your mindset. Then you can't say, okay, I was wrong. I need to change gears. So anytime you say anything definitive, catch yourself. Be like, no, I don't know what's going to happen. But the question should always be, okay, and if you focus on your risk first, the profits will take care of themselves. Focus on how much you have at risk and if you're willing to risk that. The question should be, am I comfortable with the amount of risk I have in this trade? Whether you're getting ready to pull the trigger on it or you're already in the trade. Because how many times have you gotten into a trade? You're up $3,000. You're like, woo! And the next day news comes out and boom, you're down $2,000. And now you're kicking yourself like, what do I do now? And you panic and freak out. Well, if you're not comfortable leaving $3,000 of profit at risk, then adjust the size of the trade. Close out half of it. Take half off the table. You would have banked 1,500. You reduce your risk by 50%. And then that big gap that comes down the next day, guess what? You were up $3. Now you're down. So you lost 1,000 on that second half, but you made 1,500 out of the first half. So you're still profitable. Whereas one day you went from $3,000 up $3,000 to down $2,000. Now you go, okay, I'm going to take half of this position out because I'd rather bank some of that profit, protect my profits, and reduce my risk. Now you went from being $2,000 upside down to up $500. Hopefully that makes sense. But the question that should be constantly in your mind is, am I comfortable with the risk that I'm taking in this trade? And if the answer is no, then adjust the trade so you are comfortable. Just going back to what you had yesterday, is you were like, you were nervous, you weren't sure what was going to happen. So it sounds like you completely closed it out. And now today you're like, you're kicking yourself, right? Woulda, shoulda, coulda. That's the other syndrome. Okay. Yeah, I see you. That's because I have a mirror. And so yeah, just consider that next time and it's not a bad thing. It's sometimes it's better to be out of the way and than have it go bad and cost you a lot of money. But it's frustrating when you had it right and you get out and then it goes the way you thought it would. And now it's like, But the other thing is you got to get used to that because it's going to happen on a daily basis, depending on how actively you trade, right? It happens constantly. That's never going to go away. That's the mental part of trading, is having those things happen where you look at it and you go, okay, and then you start kicking yourself because I made a mistake. Well, you didn't necessarily make a mistake. You just got out of the way, which wasn't a mistake. Could you have done it differently where it would have played out better? Yeah, but so what? Every baseball player that walks up to the up to the box, right? They step in the batter's box and they swing at the pitch. And you'll notice when you watch the pros, what do? They just go up there, they're calm, cool, collected. They're just doing their job, right? They've seen it so many times, they've taken so many pitches, they just go and they swing at the pitch, and if they miss it and they strike out, okay, they walk back to the dugout. They don't get upset. They don't get cranky. They're like, And in their mind, though, they're going back through it. They're going, could have done this different. So they're always learning from it, but they're not beating themselves up over swinging and missing. Because let's face it, that's a hard thing to do. You got this little tiny ball coming at you 80, 90, 100 miles an hour. You got this bat. that isn't necessarily light, and you have a split second to make a decision of whether or not to swing at it. And then if you do decide to swing at it, you have to swing at it, then you have to hit it, and then you have to get it into the field of play. And you have to get it to a place where a defender can't either catch it or throw you out. That's hard. That's really not much different than trading. It's extremely hard to do, right? You've got a lot of things to analyze. I talk about baseball and batting, and I use that as an analogy because it's so accurate. And when you look at baseball players, if they're hitting 300, they get a base hit 30% of the time, they're Hall of Famers. That doesn't sound that great in a lot of arenas. If somebody came in and told you could be 30% right in trading, they'd be like, oh, that sucks. You're going to get killed. But in baseball, it works. And in reality, in trading, it works too when you use risk reward properly. So don't beat yourself up over it. You made a decision. The fact that you made a decision and got out is a good thing. So, like I said, don't beat yourself up over it. You made a fine decision. Suggestion just for, the future. Look at maybe just adjusting the size of your position. I scale in and scale out all the time now, mainly for that reason, because it helps control the emotional side of things, because you were confused or nervous or worried the previous day, and today you're beating yourself up because I should have stayed in. If you would have gone through the question and said, how much am I comfortable risking? I'll leave 2 contracts on the table, maybe 5, whatever you are, however you answer that question. So just a little nugget. Like I said, I scale in, scale out. And I learned that the hard way years ago. Some of you have heard this story, Baidu. It was fairly new stock. It broke out of 80, if I remember right. This was back in 2005 or 2006. It broke out of $80 and came back. It did a beautiful textbook roll reversal. And I'm watching it in the morning. I'm like, that's the spot to get enter. I almost pulled the trigger, but then it was more risk than I wanted to take. And so I just waited. I came back and checked on it a couple hours later. It had run 4 or 5 points. Like, oh, I missed it. 4 days later, it was up 40 points. It was at 120. And I think, if I remember right, the option that I was going to buy was $4. And at the time, $4,000 was more than I wanted to put into it. And so I just stayed out. And 4 days later, I'm kicking myself and going, why didn't I just buy 1 contract? I would have been comfortable with $400. That would have been no big deal. But $4,000 was, like I said, this was 20 years ago. A little more than I was prepared to trade at the time. But I remember thinking, if I would have just done 1 or 2 contracts, because they went to I think $24. Like, I would have made $2,000 profit on a $400 trade. That's 500%. And that's where I started to see the power of, I don't care what's going to happen. If I just get 1 contract, who cares? And even today, I still do 1 and 2 contract trades. Because I look at it and go, I'm not that confident in the move, but I also don't want to miss it. So I'm willing to risk $100 or $200. All right, throw it out there. Let's see what happens. And if I get hit, who cares? It's 50 or $100, $200, no big deal. Now, when I see something I really like, then yeah, you go for it, right? You go all out, but it's all about adjusting it. So it's all about adjusting to keep your mind in a space where you're calm, cool, and collected. That's the key to it. So I just saw your comment, Brenda. That's awesome. Oh, okay, bro. Interesting. Thank you, Andrew. Looks like I don't know if that's down or not. There's some kind of bug. Should the page is down, but okay, awesome. Thanks, Andrew. I appreciate that. Getting on it. All right. Shall we get back to the topic at hand? That's just awesome. Okay, thanks, Brooke. Thanks for letting me know. All right. Where is my I shut it down. There we go. Well, I'm going to make this fairly quick because the one thing I was going to talk about today is tariffs. Um, and I'll be the first to admit I don't know a ton about them. I mean, they're the surface stuff. But I've been curious. It's on the news. It's all over the news. Seems like that's the only thing they're talking about lately, last 2 or 3 weeks at least, and it's going to probably keep up that way for a while. Um, and so I started digging into them. I mean, obviously on the superficial level, they're easy to understand. But what is a tariff? What's the news all about? Is this market drop due to a tariff? Right? What does history about tariffs tell us? What are the possibilities? Common patterns that come from tariffs that have gone historically, and most importantly, how do we trade the news? So I'm going to touch on each of these. And like I said, I don't know a ton. I've just started digging in, trying to understand at a deeper level what tariffs really are. Because, like I say, on the surface, they're just a tax essentially. That's an easy way to say that's what it is. But how does it impact from the bigger picture? Okay, there you go. There you go, Brenda. Say hi. Sit over there. That's the new crazy kitten. She loves to come over. She just lays on my hand. I've got my hand on the mouse. I'm trying to run things, and she just comes and lays down right on top of it. She hasn't learned yet. She's finally figuring out not to come try to eat my food. I've smacked her enough to get her to figure it out, but she still doesn't understand that I'm working and she can't walk on my keyboard. I hope she likes mice. This is my neighbor's fault. The one up there on the router that you can all see, that's my fault. Some lady gave me a free Maine Coon, so I'm like, all right, I wasn't gonna get a pet, but I don't have time for a dog. Then my neighbor let this little one in. She's a little kitten. When I was out of town, he comes over and checks on the Maine Coon, and she ran in the house apparently. He couldn't find her, so she's fun, but she can be obnoxious too. But with regard to tariffs, and that's what I've kind of been digging into the last couple of weeks, trying to really figure out at a deeper level what these really are. Because everybody, people are talking about it. You get on the news, it's all over the news. People are talking about it. Um, I thought I told you. Happy, kind of. Close enough. Um, you watch all the news stuff and happy. We'll go with that. Call her happy, like Happy Gilmore. uh, I watch a ton of news, especially sitting here trading. Sometimes I'll have CNBC running. Sometimes I'll turn on, I'll bring up YouTube and find interesting news stories on there that are just little clips of it and stuff like that. It seems to be more efficient to take in news by doing it that way. So, but it's interesting because it seems like the vast majority of them come out and they're all talking negative. These tariffs are terrible. They're going to create inflation. They're going to do this. They're going to do that. And then there's a handful of people out there that, they opine and they're like, well, no, I think they're a good thing. And so the question is, what is the truth? And there isn't really any, I haven't really seen so far digging into this, any really hard evidence that they're necessarily good or bad. They're good for certain things and not for others. But the big question when it comes to news is asking questions, being skeptical. What is the source of the information first? What are the biases they have, right? Because we all have biases, right? And confirmation bias is one of the most common one that we see especially in politics and also in trading, right? If you're not familiar with biases, you've got to be careful of them. The confirmation bias is the one basically says you will only accept news that confirms your current belief, which kind of goes back to what we were talking about earlier with Dennis, is that if you make a decision that I believe XYZ, it's really hard to see ABC when you have convinced yourself that XYZ is the only thing that's factual. That's confirmation bias. So I'm only willing to accept and see. I maybe will look at some other information, but I will never accept it as potentially the truth or the truth because I already believe XYZ and I'm stuck in that box and I can't get out of it. That's confirmation bias. You only look for information. You only accept information that confirms what you currently believe. That's one thing that's really, really, and that kind of comes back to what we were talking about earlier is that if you convince yourself, you confirm that you believe that it's going to do stocks going one way or the other, you got yourself in a dangerous box because then it gets hard to change your mind and say, okay, I'm not sure now. It goes down to human ego. We don't like to admit that we're wrong, right? I mean, when's the last time you went and intentionally did something wrong or believed something that you knew was factually wrong, but you just wanted to believe it, so you just did, right? We don't. It's not normal. But the big thing to ask is what is the motivation behind these people's opinion? What motivates these people to say the things they're saying? Is there a deeper motivation or are they sincere in their beliefs? Or do they have something that they're trying to push? They're trying to push an agenda. They're trying to push a narrative. They're trying to push, to sell a product. I love Peter Schiff, but at the same time, and he's a massive bear, and actually I happen to agree with him, but he also has a gold fund, right? He sells gold and silver, and he also has I don't know if it's a hedge fund, it's a mutual fund or whatever it is. I think it's a hedge fund that invests. So he has a motivation there to be bullish on gold and be bearish on the overall market. At the same time, I find him to be genuine, and I think his beliefs are real. It just so happens that his beliefs and his profit motivation are in alignment. So, uh, so I don't have a problem with it as long as it's not. If somebody's clearly doing something or saying something so they can push an agenda, push a narrative, push a product, that's when I get skeptical of them. So you got to be skeptical and ask questions. And whoops, that was on. Because everybody has different motivations for doing things. And if you don't know what they are, then sometimes it's easy to get hoodwinked. So, right, you're like, oh, so and so said this. Well, yeah. And then some people, oh, economists. Some people call people economists. Like, what's his name? Robert. Gosh, he's been around for 3 or 4 decades. And he's a hardcore liberal, and his political biases shine through like a 20 carat diamond because everything he talks about economically is entrenched in politics. So I don't consider him to be an economist, even though he calls himself an economist. He maybe has a piece of paper that says he got a degree in economist as an economist, but it's always a political perspective from him. It's like he can't separate the two. And there's definitely some intertwining there. There's no doubt that the politics affect the economy, but it also works the other way. So exactly, Brenda. Yeah, it's dangerous. If you believe something that's inaccurate, then yeah, you make bad decisions based on bad information. Hence the reason to ask questions and be skeptical. I've been like that most of my life. I'm not much of a go along to get along kind of guy. It's like, why are we doing it this way? That's why I didn't make it in the corporate world years ago. I tried for a couple of years. It was like, no, I have to be self-employed. That's one reason trading was perfect for me because I don't have to deal with all this BS. Um, so yeah, and I was essentially pushed out the door because I I'm an efficiency freak and I like to solve problems and like, okay, here's the problem I see. Why don't we do it this way? And all these guys are like, no, this is the way we do it. Well, why? Don't ask questions. Just go do your job. It's like, okay, sorry, that's not me. If there's a better way to do it, why wouldn't we? If it's more efficient and makes us more profitable, why wouldn't we? It makes no sense not to. That's good, Dennis. I've never seen that. If I have, I don't. Well, maybe I did years ago, but Poly /ticks equals many bloodsuckers, and it's coming out that that's exactly what they are, huh? That's a sad truth. I mean, ultimately, it's our responsibility as we vote for a lot of these crazy people, but tis what it is. So, and again, I'm not necessarily trying to get into politics, but if you have I mean, you're welcome to put whatever point of view you want to on there. Okay. And here's where I think we are. Back when I was a kid, we used to. I mean, I grew up in a pretty political household. We sat and we would debate. When I got into teenage years, we would have debates and go back and forth. And my brother and I were fairly opposite. Um, and most of the time it was fun. Sometimes it would get intense and get a little too personal, and that's when we recognized you got to cut it off. We don't do that very often anymore. But in the old days, we used to have debates, and you could still walk away as friends. And you respected the fact that, okay, you have a different opinion than mine. We may not believe the same things, but I respect your opinion. These days, it's not that way. It seems to be more like you're either on my team or you're not. And if you're not on my team, then you're the devil. And I'm gonna just crucify you. It's like, what happened to just having a difference of opinions and respecting the other opinions? I think we've lost that, unfortunately, and that's where I think we're at, generally speaking. So I think if there's a mutual respect, we can have different opinions. If there's a subjective topic, we can see it from our perspectives. If it's objective, that's one thing. When it comes to economics, when it comes to trading, very few things are objective. When you're analyzing things, you're doing this, most of it is subjective. So it's opinion based. But what are the possibilities? Okay, impact on corporate profits. This obviously could have an impact for certain companies. Some companies will do well, right? Sector specific reactions. Market sentiment obviously has shifted quite a bit in the last few days or few weeks, which is perfectly fine with me. And I've said this, I think it was the last Trading Coaches Playbook I did, maybe the one before, is that I have been, well, most of my trading since the end of 21 has been bearish, even though we've had this bull market, which is debatable, right? Go look at Estee Lauder. That's one I happened to stumble across last night. Go look at Etsy. Those are just two examples that came off the top of my head. I remember looking at them last night. They've been in a bear market. Estee Lauder was at like 350 and at 20 end of 21, early 22, it's now at $65. Estee Lauder, a makeup company, they're down 80, 90%. They've been in a bear market this whole time. But see, they're not one of the Mag 7, so they don't impact the larger market because they're so small. But there's lots and lots and lots of stocks like that out there that are little companies. They're out there, but they just have been in a bear market. Wayfair is another one. Same thing. They peaked out at, I don't remember what it was, 250 or 300, maybe 400. I don't remember what they went to, but they're down in the 50s or 60s now. There's a lot of stocks out there that are down 60, 70, 80, 90%. So this whole bull market thing is, it's a little deceptive. And when you have seven stocks that make up a large percentage of that, then there you go. So it appears from the market's perspective that we have a bull market in place, when in reality, when you really look at the bigger picture, it's not really there. Inflation and interest rates can be affected, right? Currency effects. I think the biggest part is the impact on corporate profits, but some companies will do well with tariffs. So the sector specific rotation is there are going to be companies out there that will do well. There's other companies that will get hurt by it. And honestly, I think my opinion is that I think Trump's doing it as a negotiation tactic. I think his ultimate goal is to get the free trade. That's what it appears to me, is that he's using this as a negotiating tactic and saying, and putting it out there and going, okay, this is what we're going to do. Getting other countries to come and say, okay, because it is, when you look at the trade imbalance, it's not really been a level playing field. We're exporting wealth is what we're doing. We're giving wealth out to other countries through trade. And there's the big question. I didn't put this, I thought about putting this in the PowerPoint, but China has some of the most restrictive trade policies on the planet. People keep saying it's going to create inflation. It's going to create inflation. Well, if China is one of the most restrictive countries on the planet, why don't they have inflation? In fact, China is experiencing deflation right now, which can be, depending on how bad it is, can be even worse than inflation. But China is in a deflationary environment, and yet they've got some of the most restrictive tariffs on the planet. So why do these people keep saying that tariffs are going to create inflation? And Trump did tariffs in 2018. Then he created inflation. There was really no inflation during his entire term, first term. So anyway, yeah. Who is this Mark Chaikin guy that says NVIDIA is going to bust? I would say this, and going back to the previous one, talk about being skeptical and asking questions. What's the motivation? He's probably a hedge fund trader, and he's probably short NVIDIA. Whenever you see somebody come out and bad mouthing a company, especially one that has had massive growth, and he's saying it's going to go bust, I mean, I suppose that's possible, but that's probably about as likely as Microsoft going bust. Maybe in 50 years, yeah, but recent now. So odds are, I would say he's probably in a short position. He probably wants NVIDIA to go down so he can make a profit. Again, what's the motivation? What's the motivation for them saying something like that? Because you've probably all seen that if you've been around the market for a while. There's just people come out and they're like, oh, this company's going to go bankrupt, or this company's terrible, because they're in a short position. And they want it to go down. I don't know. I've heard the guy's name, but I don't know anything about him. So, oh, he has an indicator that can predict where the market is headed next. Yeah. So do I. That's again, going back to the skepticism. You got to be careful of what people say all kinds of stupid stuff. I saw some goofball on Facebook running some ad. I got this automated trading system for Apple. It's right 95% of the time. And I'm like, no, you don't. You don't. I'm sorry. Okay. Because if you get into that world, and I've been in that world, and I'm playing around with that world where you go create trading systems like mechanical trading systems, what's the term? I'm forgetting it right now. Non-discretionary, where it trades just purely off of data. Well, you have to go fit the data to different time periods. If you go take Apple during a 5-year period or a 10-year period where it's bullish 95% of the time, and you go run this data based on that 10-year period of time, then yeah, you're going to be 95% accurate because you have a system that was built to recognize a bullish situation and you tested it only on a bullish situation. What happens in a bear market? What happens if you take that system you do and you take it and you move it over here you go from 2010 to 2020. Well, if you move it over here from 1995 to 2005, it's a whole different ballgame because you got the dot-com bubble crash of 2000. Now, how does your system work? So you got to be cautious of people that are putting this stuff out there. In fact, any mechanical system, non-discretionary system like that somebody builds, anything over 70% is suspect. If you're building a mechanical system that is non-discretional and you're just using data and saying, based on this, if it hits this moving average, if this happens, anything over 70% is suspect when it comes to mechanical trading systems. Yeah, I get a little fired up about some of this stuff. There's a whole bunch of just junk out there. That's what you got to be careful. I mean, there's lots of people out there shilling lots of different stuff. And again, going back to the skepticism is what is their motivation? Why are they saying it? And one of the ones that will get me the most fired up is this whole myth that 80 to 90% of options expire worthless. And the reason I get fired up is because I saw a guy years ago. He had a friend. The guy had a traumatic brain injury 25 years before. And he finally was at a place. He goes, I think I'm comfortable making decisions, but I want my buddy to come check this out and help me out with it. Because I want to do this. He wanted to come to the workshop. He wanted to pay the money to go to the workshop, but he still wasn't 100% there. So he brings his buddy back. We end up after the preview thing, we have a conversation. He goes, okay, let me ask you a question. I think it was the second, whatever it was. True or false? 80 or 90% of options expire worthless. I'm like, false. Oh my gosh, Gene, let's get out of here. This guy doesn't know what he's talking about. He's an idiot. It just so happened I had Larry McMillan's book with me. It just so happened I just started rereading it on the plane on the way out there. And I highlighted. So I said to this guy, I said, you know Larry McMillan? No, who's that? Well, he's pretty much the options guru. He's been trading them since they were listed in 1972. In his book, on page 21, he talks about that myth. Would you like to see it? I just so happen to have it with me. He goes, okay. So I go grab the book. I come, I flip it open, see, and I just highlighted it on the plane literally the day before. I go see it. Page 21, he talks about how this is a myth. And this guy just sat there stunned. He's like, and after he left, Gene finally told me, he goes, he spent like 15 or 20 grand with this other company teaching him to sell puts based on the myth that 80 to 90% of options expire worthless. So if you sell a put as a strategy, the odds are in your favor because 80 to 90% expire worthless. When that's not even true. So this guy was literally spent 15 or $20,000 of his money to get educated on how to trade based on a myth. So yeah, I get really fired up about that kind of stuff because that guy was really, I mean, he was clearly mad because he'd been completely misled. And he realized it. And I felt bad for him. So it's one of those things, like I say, I just get, and after that, actually, I emailed, I went to McMillan's website. I sent a message in through there. I'm like, hey, I read this in your book. I'm just trying to figure out, I see it in your book, but is there any other data to back that up? And he actually emailed me back and he said, yeah, he said, I tried to get it from the CBOK, but they wouldn't give it to me. So and he's a big computer guy, right? He spent 4 or 5 years compiling the data himself. And he sent me a spreadsheet. He goes, here's the data that I kept myself. It was like 4.5 or 5 years worth of data. And it actually shows that I think it was, if I remember right, it was 46 or 48%. Maybe it was 52. It was just right around, give or take, right around 50%, give or take a little bit, that they expired with value. I think it was 40. I think it was 46, but they estimate that about 10% of options are closed before expiration, right? So people close them out. So they don't, because they already have value, right? They're selling them because, maybe it's $2 in the money. So they're selling for $2. So it's actually more than 50% have value at expiration. So that whole myth is just crazy. Anyway. So yeah, whenever I see stuff like that, that's part of the reason I'm skeptical. I've had these experiences where you meet people like that and they find out that they've been bamboozled. There's a lot of people in this industry that don't know enough. They know enough to be dangerous, then they start promoting their stuff and they're off base. So listen to a lot of people, but be skeptical, ask questions, and figure it out for yourself. I mean, that's the only way to really do it. So yeah, whenever somebody says they have an indicator they can predict where the market's headed next, yeah, that's a crystal ball. What they're telling you is I have a crystal ball, and nobody does. Yeah, run exactly. Yeah, exactly, Tom. It's leverage. So, but anyway, getting back to this, I just really got a couple minutes. I don't think I can even get through all this. So, but blaming outside forces, this is one thing, and this is why the media and everybody in the news is saying, "Oh, Trump's the reason this market is tanking." The whole tariff thing, it's uncertainty and all that stuff because it's intuitive, right? If you go back to when you were a kid, what did you do? You did something stupid, you hurt your brother or sister, and it's like, well, he started it, or they did this, or they did that. I mean, it's intuitive that we want to blame somebody besides ourselves. Taking responsibility for yourself is not a natural thing that we do. We always want to point the finger outside of ourselves. And if you find yourself in that box, break the walls down as quickly as possible. Okay. This market was overbought. It was too crazy. The valuation is too crazy to begin with. That's one thing I think that's going to be bad for Trump is that the economy needs to take a big dump. The economy needs to cool off. And you got real estate's in a bubble. You got the market is in a bubble. It's correcting. It needed to correct. So does real estate. And I've been talking about this for 5 to 10 years, and especially lately, even more. If I remember the data right, it was 60% of the money that's invested into stocks, into the stock market, is the baby boomers. They own the vast majority of the wealth, and they own a lot of the homes. So what's going to happen? They're sitting in a $500,000 house right now. And if that drops 20, 30, 40%, they're feeling wealthy right now because, hey, my house is paid off. I got $500,000 here. But if in a year it's worth 300,000, and if they have a stock portfolio worth $500,000 and it drops 30%, they just lost $300,000, $400,000, $500,000 of net worth. What are you going to do? Some of you might be in that camp. I don't know. I don't know how old each of you are. I'm middle-aged. I'll be 49 next week. It's crazy to think that. This is almost 25 years. April 3rd and 4th of 2000 was when I sat in my first workshop. But yeah, it needs a reset. That's the big thing is that you've got a huge generation and a huge percentage of their wealth is in stocks. And I guarantee you that right now, over the last 3 or 4 weeks, a lot of them are on edge. And they're looking at it, they're thinking they maybe just retired recently or they're about to retire. And they're like, I had 500,000 there. Now it's at 450. At what point do I bail? And if you get a big section of that generation that looks at their money and they go, you know what? I had 500,000. Now I'm down to 400,000. I don't want to lose anymore. Cash me out. Put me into something safe. That's going to happen at some point. If things continue downward. If they don't, if this thing bounces back, then they'll be comfortable again. But if it continues to slide like it is, then yeah, that's gonna it could get really, really ugly, is what I'm saying. Okay. It's ridiculous. Um, but here's the crazy thing. I met a gentleman a couple days ago. He works at the medical center here. And he said they just fired 110 people yesterday. People that have been there like all the way up and down the chain, executives all the way down through to low-level staff. It was just boom, 110 people because they don't have the funds. Their COVID funds have run out. Medicare doesn't reimburse enough, and they just built a $25 million building. They got a $40 million budget gap, and so they're just like, Zoom, set up a Zoom meeting. We're having a Zoom meeting. You're fired. See ya. Get out. People there 20, 30 years. No severance, nothing. See ya. Pack up your stuff. If you don't leave, we're going to send security to escort you out. That's the way they did it. And he said there's a few hundred more coming in the next couple of weeks they're expecting. So the news media, again, this is going back to the skepticism, is the news media is saying that Um, oh, the economy is great, and they're pointing to this data, but is it really? Is the data accurate? Because clearly we didn't know about all the fraud and stuff that was going on, but now it's starting to be exposed. So, and that's happening just here where I'm at. So you got 110 people that were probably, most of them were probably making a pretty solid living, and now they don't have a job at all. And what's going to happen if they can't get a job? And the immediate thing they're going to do is do what? They're going to stop going out to eat. They're going to stop shopping. They're going to stop doing this. They're going to stop doing all the excess stuff that they were living comfortably 3 or 4 days ago. Now they're freaking out like, I don't have an income. They have to live off of their savings or what they have or unemployment while they look for a job. Starbucks just announced a month or two ago they're laying off 1,100 people. That's a homegrown one here. That's the corporate office right in South Seattle. 1,100 corporate staff. Not at the stores, but the corporate. That's 1,100 people in Seattle that are going to be gone. How are they going to pay their mortgage? I mean, you hope they saved up some money and they have a cushion there, but a lot of them won't. Foreclosures are starting to be on the rise. I know I've got friends in the lending business. Loan modifications have been, for the last year and a half, people got behind on their mortgages. And so they're having to modify. So they take the amount they're behind. The lender just says, oh, we'll tack it on to the end of the loan. So they just catch them up, tack it on to the end of the loan. And there you go. So there's a lot of stuff happening underneath that the media won't tell you about because they don't even know about it. They don't see it. They don't know it's there. And some of it's anecdotal, just, people that I know and things that I see and things that I know, around my area in my little circle. But if you get yourself stuck in a bubble and you don't start to explore those outside forces and things and go, okay, I don't know what's going to happen here, you could get blindsided. So I think this year could be extremely, extremely rough. So for most people, and I don't want that to happen. I mean, am I going to take advantage of it? Heck yeah. Why wouldn't I? I mean, if I know how, I already am. I mean, this last month has been spectacular. I've just been killing it because I've been trading the bear side since the end of 21 when I saw the bear market coming. And it hasn't changed, even though we've had a bull market. There's still a lot of stocks. Like I said, Estee Lauder, EL, Etsy. Well, here, let's just do this. I gotta shut up and go. Come on. There we go. So there's Estee Lauder. Right? There's 21, August of 21, peaks out at 350. It's now at $67. Come on. I don't know why it's going. I'm trying to figure out. She likes to lay on the keyboard. Anyway, Etsy's coming up too. I'm trying to pull that up, and again, I mean, these are small companies, but there's a lot of them that are doing just this. There's Etsy, peaked out at 300. It's now at 50. That's $250 lower. That's, what is that, 85%? Whatever it is. That's a lot. So obviously the economy is not as great as they want you to believe it is. Because if it was, then companies like this would be doing well. So there are some that are doing well. There are some that will benefit from the tariffs. There's some that won't. I think in the short term, the economy is on edge. I think it's probably going to correct in a big way, which the beauty is, and if you've studied the history of finance, that's where when markets crash and economies get bad, that's where the super wealthy get, actually the nobodies get super wealthy, right? You go back to the Rockefellers. What did they do? They had some money waiting, and when the economy tanked, what did they do? They took advantage of it. And they used their capital they had to build a generational wealth. So even though a lot of people are freaked out and they're worried about a recession or this or that, I see it as an opportunity. So you can spin it however you want. Some people call me, oh, you're Debbie Downer. You're always so negative about things. It's like, I'm not negative. I'm looking at it as, here's an opportunity for me to grow even more than I could have if it wasn't doing that. So it's a matter of seeing it from a positive light and knowing how to take advantage of the opportunity instead of saying, oh, woe is me. Right? So anyway, how's that for a pep talk? Where'd they? I lost the chat box. Where'd it go? Let's see that. Okay. Exactly, Dennis. Yeah. And it rains. As soon as it rains, even though it rains like 3/4 of the year here, if it starts to drizzle, which is what it usually does, they slow down 10 or 15 miles an hour. It's like, how do you not know how to drive in the rain already? It's just no way. I mean, come on. HHS, CDC losing a lot of people. Yeah, you look at Washington D.C. I mean, it's the whole area is apparently the real estate is dropping in value because people are getting laid off. Federal government workers are getting laid off, which is why the economy, the faux economy, has been there. Because when you spend a boatload of cash, you spend $2 or $3 trillion a year pumping it into the economy. Guess what's going to happen? It's gonna be a false front, and that's what we've had. We've had a false front economy for the last 2 years because we had a recession in 22, an actual recession. Even though they tried to redefine it, so no, it's not a recession, but they knew it was a recession. And so they did what governments do in recessionary periods is they start spending money and they blew a ton of money into the economy, which again propped it up, made it look like we had a good economy. It's a faux economy. It's not real. It never had. It hasn't been for 2 years. It should have kept going. In fact, every analyst on the planet said 23 was going to be a bear market. 22 was a bear market. They were all saying it's going to continue into 23. But Biden started blowing money into the economy and that propped it up, which is what governments do in recessions. So how this one's going to be handled, I mean, I'm significantly more comfortable with Trump being in place than somebody else. At least, if it does take a dive, which it looks like it's going to, I'm hoping that he'll respond in a positive way that will help bring things back. And actually, I think tariffs may be part of that. I think he knows. I think he knows what's coming. But he can't come out and say it publicly, just like Jerome Powell. People are like, why doesn't he just say this? He can't. If Jerome Powell comes out and says the economy's in terrible shape, what's going to happen? The market will sell off like you've never seen. People like that in that position can't come out and be honest. So you've got to parse through their words and you got to try to figure out what's real. And you got to either just ignore that and see it as noise. Because, I mean, if Trump came out and said, yeah, the economy is not doing well, what do you think is going to happen? Right? It's going to just tank. So those people in that position, they have to hold the line. And I don't necessarily want to call them liars because they can't come out and speak the truth because they're in a position that the market would absolutely panic. So I feel bad for them, actually. But I think both of them know what's going on. And if you didn't know this, I just learned this a couple months ago. Jay Powell is not an economist. He's an attorney. A lot of the people at the Fed are not economists. They're attorneys that have something else. But Jay Powell is trained and he has a degree as an attorney. He practiced as an attorney, I think, for a long time. He was never an economist. He's still not. I thought that was really interesting. But that's who you need in that position. Somebody that can, walk the line and say the right things without crossing the line and saying the economy sucks and it's going to tank. Because then panic ensues. So same thing, and I don't know why this is on my mind, but it hit 9/11 just hit with, Bush coming out saying things and people are like, he didn't respond at all. He's sitting there in this classroom. He just sat there. Well, what are you going to do as the president? Jump up and freak out? I mean, the whole country's going to panic then. So they got a tough job to do. They got to dance this line of, keeping their cool in a super intense, crazy situation without freaking the masses out. So I don't envy them. I mean, it's got to be a hard job. So anyway, all right, I'm way over now. So we got to run. And obviously at least one cat wanted to say goodbye, so she just came down. You gonna say goodbye? No? She just shook her head no. All right. Thanks, Helen, by the way. I appreciate that. If I'm not fooling you, that is, right? Nah, I'm really not. So anyway, appreciate that. So all right, y'all have a great day and a good weekend and happy trading. So yeah, exactly, Brenda. Happy trading. So just bears give a lot better hugs than bulls do. Just remember that. Awesome. Thank you, Tom. I appreciate that. So all right, y'all have a great weekend. We'll see you next time. God bless. Bye-bye.